Hello, I'm Lance Zimmerman with the Cattle Facts closing bell for Friday, November 18th. Commodity prices have climbed higher during the last 10 years, and higher prices have led to larger price swings. This has left producers vulnerable to market volatility. In 2011, the average week-to-week change in fed cattle price equaled $28 per head. Weekly feeder cattle price volatility has been at $13 per head, and calf price volatility has been around $11 per head. Producers have changed their risk management strategies to better protect themselves from this variation. Participation in the futures and options market has increased, and producers are considering forward contracting as a source for buying and selling cattle. Feedlots and packing plants are no exception. In the last 10 years, each sector has increased forward contract pricing to reduce market risk. Feedlots sold a nearly identical number of cattle on the weekly cash market and in alternative market sales from 2003 to 2005. By 2011, formula, forward contract, and other sales arrangements grew to more than 70% of all fed cattle sales. Packing plants made similar adjustments with wholesale beef. Future delivery and spot market sales were consistently around 45 to 55% of business 10 years ago. Today, 63% of wholesale beef is marketed through a future delivery arrangement, while spot market participation has fallen to 37%. The packing industry's increased forward sold position on beef has likely led to more favorable margins this fall than industry models imply. It has also encouraged packers to bid more aggressively for fed cattle this fall to meet contractual agreements, which has been supportive to the greater cattle market. Forward pricing has become more important to the beef and cattle industries in the last 10 years. With more market volatility, the sales positions held by industry participants will become more important in understanding future changes in cattle and beef prices. Now, your weekly market update. The fed cattle market was mostly $2 to $3 lower this week on moderate volume. Live cattle sold for mostly $122 to $123.50 per hundredweight. In the north, dress sales occurred at $196 to $198 per hundredweight, with the majority selling around $196. Boxed beef values increased $5 per hundredweight on continued strong demand for higher quality cuts, especially choice ribs. The Choice Select spread maintained an $18 margin in the spot market. Feeder cattle were quoted $2 to $3 higher, and calf prices were up $2 to $5. Slaughter cow prices were steady to $3 better for the week, with seasonally strong volumes. Corn traded similar to last week, with decent support early in the week, giving way to softer prices by the weekend. In general, demand for grains has been weak, which has been placing additional short-term pressure on corn prices. Looking forward, fed cattle prices will likely move lower into next week, with a softer futures market and reduced slaughter levels. Basis levels continue to be positive in all regions, but it's reasonable to expect cash prices to give up ground next week. Feeder cattle and calf markets continue to find strength as we move from the fall to winter. The CME reported feeder index moved to new highs this week, nearing $143 per hundredweight, and tighter supplies should continue to support prices going forward. Boxed beef prices have been well supported in the $180 range, and rib demand will be key to further cutout advances, and recent support from end meats and trims certainly helps. Rib prices should be approaching the annual high, and wholesale beef demand will likely soften after holiday needs are met. Seasonally, prices should retreat from the fall highs shortly after Thanksgiving. Corn prices continue to face selling pressure amid softer grain markets, and expect prices to trade around $6 per bushel in the coming week. The USDA also released its monthly cattle on feed report. Feedlot industry inventories as of November 1st were at 104% of a year ago, identical to trade expectations. October placements were reported at 99%, nearly identical to pre-report estimates, while feedlot marketings were at 103%, 2% higher than industry expectations. Thanks for watching, and remember to visit cattlefacts.com for your latest market news and analysis.